Hi guys, so I just wanted to do a quick video on two really interesting stocks that popped up in my earnings winner scan just now. And I apologize for sounding like a frog, but as you know, I have the flu from the past week. But I still wanted to record this video today because these two stocks I think are really interesting case studies and can add a lot of nuance to the rules for what qualifies as an earnings winner and what doesn't. So I got these questions in my DM today. Dustin asked, you said in your videos you don't like buying old trends. That's true. Would you consider Powell to be an old trend? You could argue it's on its third leg up, but it had a decently long base. Okay, so he's referring to this video, which in case you haven't seen, I would highly recommend watching before you watch this video, because this is going to lay out the rules and the main theory. And then in this video, we're just going to apply that theory to two really interesting case studies. In my newsfeed, there was also a lot of euphoria about SMCI today. And a lot of people asked me, is it on my list? Am I adding it to my earnings winners list? So let's also take a look at that because that also offers a really interesting corner case or an outlier case study on what should or should not be added to the earnings winners list. Okay, so just a really quick reminder. In my video on old trends versus new trends, I just highlighted one simple rule, which is don't buy a stock after it has already made 3 legs up. And what was the reason for this? Because it's overextended and the probability of a fourth leg is very low. Now, this doesn't mean you can't have a fourth leg or even a fifth leg and a sixth leg. It just means that the probability of having that is much lower. And this old trend versus new trend rule was part of the 3 criteria that I use to qualify a stock as an earnings winner. First, it has to be breaking out of a base. Second, it has to be a new trend and not an old trend. And the third, it has to have a strong catalyst. Okay, and if you are curious about this, then I highly recommend you check out my video on how I enter earnings winners, because that'll give you a whole explanation of what these 3 are, along with examples of what do and do not qualify as these. I don't want to waste time in this video going through that again. Okay, so first let's go through Powell. So this is the weekly chart for Powell, and if you remember, Justin rightly pointed out that it's breaking out from a large base, and that is indeed true. For the last 10, 20, I don't even know, since 2007, oh my God, like almost 20 years, the stock has just been going sideways. So on a weekly chart, this is not something I would call an old trend. This is definitely breaking out of this long recent 5 to 10 year consolidation and can be seen as a relatively new trend. But wait, let's dig into the daily chart. Now, on the daily, in December, it did have another gap up here and a bit of a first leg, then consolidates, had a second leg, and then goes into a really long consolidation. But these 2 legs both occurred within the base. This blue line is the line where it breaks out of that huge weekly base into new territory. So since these 2 legs occurred within the base itself, and I can go back to the weekly to show you what the base looks like. So this blue line is the same one here. And since these 2 legs occurred under that is within the base, I don't tend to count those as first and second legs. This is when I would start counting if the stock does have an uptrend from here and starts going up, say like this, like this, like this, like this, that's when I would start counting the number of legs up. So in my view, this is still the start of the first leg, potentially, if it does continue to go up. Now, the other thing I just want to point out is My third criteria for what qualifies as an earnings winner is that the stock should have a strong catalyst. And in this case, if you go on Finviz and look for what really was moving the stock today, you will see the second quarter key highlights. The revenue strengthened, an increase of 34%. That's pretty good. Backlog more than doubled to a record 1 billion. That is really, really good. New orders more than tripled to 508 million. Again, that is super positive and very strong. Gross margins improved 460 basis points, that's 4.6%, to 19.5%. Again, that is a really good positive sign for the company. So these numbers put together tell me this is a company that's experiencing growth, and there is some serious demand for its product, and it is hitting big numbers. This is exactly what you want to see in an earnings winner. So what would be my verdict on this? I definitely added POWL to my earnings winners list today. Since it's just breaking out of that huge weekly base, I look at it as potentially making a first leg up, and the news or the catalyst or the earnings numbers on the stock are just too good to ignore and to not put on my watch list. Okay, let's go on to SMCI. So this is the daily chart of the SMCI. At first glance, look at how stretched it is, and it's been in an uptrend for quite a while, almost a year. And this is the weekly chart. Let me show you a close-up of both. So in the weekly chart, you can see it was in a really long base starting 2015, so almost 8 years. And it just recently broke out of this base about a year ago, and since then has been going up. Now, on the weekly chart itself, you can pretty much get an idea of how many legs the stock has had up. So if you count the breakout from this big weekly base as starting here, you can see one leg up, two legs up, and then a little bit of a third leg up. Let's take a look at the daily chart to get a closer look. Here you have one leg up, then it goes sideways for a bit. And this was almost, this was a power play or a high tide flag. This went up 100% here. It then goes sideways for a few months, then goes up another 25%, goes sideways for another 6 months, and then goes up another 43%. So this stock has clearly had 3 legs up. So do you think this is an old trend or a new trend? Clearly, it's an old trend. So since this is an old trend, you would think this immediately disqualifies the stock from being on my earnings watch list, right? But that's the reason why I wanted to discuss this stock, because sometimes you just want to look deeper and see what the news is. And I wish trading were that black and white or as objective, but sometimes you have to let your subjectivity creep in. So what was the news on SMCI? I was just curious, why is everyone talking about it? Why is it going up? So SMCI actually missed on the top and bottom line estimates, but investors are optimistic about the company's full year guidance. Okay, now that is not so positive, as you always want to see a stock beat or at least match the top and bottom line estimates, but never miss. But then the investors did say that the guidance was good, so I dug in a bit deeper to see what the guidance was like. And this is what I found. Management estimates that the revenue for 23 will range between 6.6 billion to 6.8 billion, which puts the midpoint of guidance ahead of analysts' average estimate of 6.69 billion. Now, is that a big beat? The midpoint of this is 6.7 billion, and the analyst estimate was 6.69 billion. Now, that's hardly a raise in the full year guidance. Now, additionally, Supermicro's non-GAAP earnings guidance of about 10.5 to 11 for the full year is better than the consensus estimates of 10.25. Is that also a big beat or a big surprise or a huge raise in guidance? No, not really. 10.25 and 10.5 are not that far apart to justify this amount of exuberance or optimism about the company's future. So I started to wonder, why did SMCI pop so much today? And that's when I found this. SMCI accelerates the era of AI and the metaverse with top-of-the-line servers for AI training, deep learning, HPC, generative AI featuring NVIDIA, and blah, blah, blah systems. Okay, so this was actually a press release by the company itself, and they wanted to let the world know that they are entering the world of AI by using the word 3 times in the title itself, and the metaverse, another buzzword. Now, if you've been trading this market for the last month or two, then you know that AI is sort of a current buzzword and a hot group, and is very likely to turn into a bubble. So when you see a stock that's positioning itself within this hot group, it has the potential to ride along with the rest of the stocks in that group and become really bubblicious or go parabolic. And if you Google around, there's a couple of articles from Yahoo, IBD, and Motley Fool talking about how AI could go parabolic. How SMCI, which is an AI stock, could go parabolic this year. So what do I conclude then? Given that SMCI's earnings missed, the guidance was not really surprising or a huge beat, but it's part of the AI group and is positioning itself within a potential bubble. So I did add SMCI to my universe, but only because of that exception where it's positioning itself within that hot group. And if I see it breaking out, what I'm going to do is treat it as a swing trade and not a position trade, because I know that it's already extended and made 3 legs up. So the odds of it making a 4th, 5th, 6th, 7th leg are much lower and lower. But I still want to make money off of this trend in this hot group, this new buzzword, this new bubble. So I would keep this on my radar. And anytime that I see AI stocks run, I would take a look at SMCI, see if it's participating, meeting all the rest of my criteria, and take it for a short swing trade. So hopefully this discussion on POWL and SMCI helped to add some nuance to the theory that I laid out on how I pick my universe of earnings winners. Again, since this is a discretionary system of trading, things are always not going to be as black and white as me giving you a checklist of 3 things and 1 rule. And if things just follow that, we add them. This is why I wanted to focus on these case studies. And the more experience you get, the more you do the scan every day and participate in the market, you're going to pick up on these nuances and be able to do this yourself. And so let me know what you think. And in case I'm missing something, because I could be completely wrong, you guys, please do let me know below. Thank you.